bye, 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 bye.
I know I'm a grifter, strong man. You could lick your hand and smack me in the nutsack. Thank God for Tesla, my Tesla, and you, strong man.
Good morning, everybody. Welcome back to Strongman Personal Finance. Unfortunately, I do not have Jeremy Financial Education on today, but I have somebody even better. Jacob, Weaker Man.
Hello.
Welcome back. You were very popular. You were a hit the last time you came on.
Apparently, total surprise and a welcome one.
Oh, don't be shy.
But yeah, like it's really good to be back into. I thought your internet crapped out again. Yeah, it's really good to be back and to say hi to everybody. You guys are awesome. I read a few of those comments. Thank you. And I hope to show that I'm not a grifter. I'm here just to give you guys some good info from a sane human and not someone who's trying to take all your money.
Well, after our discussion, we're going to talk about your course, right?
Oh yeah, exactly. Only $199 per week.
Man, that's damn. That's in Canadian dollars, right?
Yeah, that's like $175 US.
There you go. See, we're not grifting you, man.
Yeah, that's cheap.
You didn't pay me $1,000 to come on here. I love starting rumors. Like all these freaking clowns believe that Meet Kevin pays me. I wish he freaking paid me, man. $2,000 a month. Ooh, boy.
I take that money.
Oh yeah. What do I have to do? Not talk trash about him? $2,000? Yeah. Yes, sir. Anyway, so what's the topic for today? Because I'm a terrible YouTuber. I don't plan anything, but we are going to talk about, the state of YouTube finance, YouTube personal finance. We're going to talk about our thoughts on the market, blah, 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 blah. So I'll put the ball in your court, Jacob.
Yeah, we'll let you start. So let's kind of talk about the state of YouTube. I've been in this market for nearly 9 years now, which isn't as long as maybe some people who have been investing, but it's probably substantially longer than a lot of you that are here that have only been in the market for maybe 2 or 3 years.
10 years.
And 10 years for you. And I've also been paying attention to crypto before it was cool back in 2014, 2015. I was also watching crypto channels and learning about crypto, bought a little bit, sold a little bit, but primarily focused on stocks. And I've watched a lot of YouTube over these past 5 or 7 years of finance YouTubers. And I could say that there certainly has been a shift and a change where it started out probably 2015, 2016 finance YouTube with primarily people like Stephan and Meet Kevin talking more about real estate or talking more about personal finance, not delving too much in individual stock picking. And then in 2017, when Bitcoin first popped off, it went from 2,000 or 3,000 USD to 20,000. That's where a lot of finance YouTubers came onto the scene. I don't know if you were watching YouTube at that time, Chris, but that was a very interesting time. I in my opinion, I think that's the birth of the modern YouTube guru. And then 2017, 2016 is also then when you got just general gurus or motivation gurus coming onto YouTube really heavily. That's where you saw those terrible advertisements by Tai Lopez, on over and over and over again. And that was that 2017, 2018 time frame. And then there was a bit of a cooling in the market in 2018. Just the overall, Bitcoin crashed, the stock market, it fell, and there was a little bit of a lull. And then 2019 or the end of 2019, that's when things started getting heated again in the YouTube world, where tons of creators came on into the scene. COVID hit 2020, the market crashed, and that was the beginning that launched a lot of these grifters on YouTube talking about individual stock picking. And that's when LaFufu made it big, Meet Kevin made it big. And now, after riding that high, where are we now, Chris?
Well, I mean, first of all, it's interesting that you've been watching finance YouTube for a long time, because I've only been watching it since, the pandemic started. And that's really what got me motivated to make my channel, was seeing all these freaking idiots picking trash stocks and, having hundreds of thousands of subscribers. So that kind of motivated me. But before, I used to watch games and stuff like that on YouTube. So I'm pretty new to the space. Now, obviously, I don't really know where we're going because how YouTube finance works is it really depends on the market. It depends on what's popular. So whatever goes up a lot in the next couple of weeks or months or years, that's what's going to be talked about. The market's down. A lot of the trash stocks are down. A lot of these guys they're shifting their content from talking about how these stocks are all going to 10x to having, fearful thumbnails. Oh, the market's crashing, the world's ending, blah, 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 blah. So I honestly can't predict where we're going to go because that's almost like saying you got to predict the market or you got to predict what's going to go up massively. But I mean, at the end of the day, these guys, these scammers, they literally just talk about whatever went up recently. And that's my advice to a lot of people is if you see somebody talking about something that went up massively recently, 9 times out of 10, they're probably a freaking scammer.
Yeah, and I don't have a crystal ball, but I've seen a similar situation like this play out in late 2017. Not specifically with people talking about stocks, but people talking about crypto. So if you were into crypto, into Bitcoin at all in 2017, all the big YouTubers who were in that space at that time. And then December or January of 2018, rather, when it started to crash, we saw the effective winterized YouTube channels of crypto where everything crashed, and then those channels were dead for a year or two. And so looking at those types of creators and what kind of content they pushed out during that time, I think I have a pretty good idea what's going to happen with the YouTube space over the next year. I think we're going to just continue to see, like you said, Chris, with people pushing out the next hot stock because that's all they have. There is no big bull run now to really booby their channels, so that they have to bring hype to what they can, and they're going to continue to pick shitty little individual stocks which have an earnings release or have a some sort of big event or milestone that they're coming up to that's going to make them pop. Because that's what was happening in 2018 when the entire market cooled. Instead of focusing on the broad market, those creators focused on niche individual coins, and that's how they were able to string along people for a year or two. And then 2020, the market went hot again.
Yeah, like if the market stays bad, like another thought I had was, okay, well, most stocks are down, most cryptos are down. And you mentioned like small cryptocurrencies. It makes sense to me that a lot of these scammer channels, what they'll do is they'll just focus on very low market cap stocks and very low market cap cryptocurrencies because they have the ability with their audience to actually pump up the price of those securities and cryptocurrencies. So they can still they can create their own 10x scenario where they're like, see, I talked about this crypto and then it went up massively because it's so small. Or this company, I talked about it, and it went up so massively. Yep. So that could be the next grift if the market stays flat for a long time or continues to go down. And then eventually, once the market at some point recovers, I don't know when it will, then they'll go back to their old content.
No one knows. No one has a crystal ball.
Well, the whole pandemic thing was just such an insane scenario. Like, I couldn't believe my eyes. The whole economy shut down. Money got thrown out like freaking candy. And all of these stocks, you could just see the bubble. It was common sense to me. They just shot up. Trash companies, even great companies, they just freaking shot up massively, like out of control. So to me, it was an obvious bubble. I don't know if there's ever going to be a time like that again, to be perfectly honest.
I don't think so. I think it was a very unique set of circumstances where there was a lot of stimulus. It was really the birth of retail investing going ham and really challenging Wall Street. And I don't think we're going to see that kind of monumental shift in trading activity for a very long time, because once it happens once, it's unlikely to then happen again, because people do learn from their mistakes. There'll always be a new sucker, or really sadly, there'll always be someone dumb to come along and keep furthering that hype cycle. But I don't think we're going to see it on the same scale where you have millions and millions of people around the world locked inside with money and nothing to do.
Yeah, that was a once in a lifetime event. Honestly, like it gave me a lot of content, and I'm kind of disappointed now because it just seems like a lot of these trash stocks, they're probably just going to stay down forever and ever, or even go bankrupt. And it's like, okay, because I may have to shift my content too. Like I focused on attacking the big grifters, but I can tell they're really switching. They're starting to switch from talking about individual stocks to just talking about macroeconomics and the broader market in general, which to me, it bores the crap out of me. I don't give a crap about macroeconomics. It's just the most boring subject to me. So even my channel will have to evolve. We'll see.
Interesting. Yeah, like I think we're gonna, like you said, see a lot of creators shift and change their content. I also think we're gonna see a lot of people stop making content because I think the views are gonna dry up, because there's only so many eyeballs on this network that are gonna want to watch content. And if your content isn't exciting or interesting, there's lots of other creators that can quickly fill that gap of audience retention.
I mean, to me, that's kind of shocking that some people, like, let's say you get 100,000 subs, right? That's an opportunity of a lifetime. Even if the market shifted, if I was a grifter, I would not give up 100,000 subscribers, because then you could talk about something else. You still have a ton of people. You could still do sponsorships. But you're 100% right. Like, I've seen some YouTube channels, like the perfect one is a guy named George Lopez or Perez, whatever his stupid name is. All this guy did was say everything was going to 25x. And his last video, he said ADA Cardano. He said it's going to 25x. And that was his last video like 8 months ago. And he completely stopped posting. But then I go ahead and look, and he has a Patreon, and people are still paying this freaking clown. Like months after that thing crashed. It's like, oh my God.
Yeah, I mean, that must be the people who just don't pay attention to their their monthly billing on their credit card.
Yeah, honestly, I think that's what I suspect. You're probably 100% right, because it's probably like $5 a month, and they're not even checking. Because like you see some of these clowns, like Chris Sane and George Perez, they have thousands of people signed up for their Patreon. It's like, there's no way these people have lost all this money and then just kept paying these freaking clowns.
Yeah, and so I think for all you watching here, the big takeaway from this is that these types of cycles in the market, they take place. And if this is your first one, no, this isn't the first one ever. This is just your first one. This is your first downturn. I've seen many of them. And if you really believe in dollar cost averaging, then don't stress. Just continue to buy diverse index funds like Chris here tells you, and spice it up with a couple few stocks which you think are priced, or their valuation is appropriate. Intel. And Intel. I don't like Intel personally, but that's just me.
I sold it.
And going back to a little bit of my research, and now I could put some actual numbers behind what I'm saying. Or some models. It's because we're dumb humans who only buy what we know exists because of our attention. Remember, attention is the biggest thing that's going to make you buy a stock, and your own self-confidence. So just make sure you check yourself at the door when you're looking at that brokerage account, that you're buying things right now most likely because they catch your attention, or because you're confident that it's going to outperform the market. And know that that's probably not the case. And I know a lot of you think that, but remember, I work in the finance space. I see your guys' accounts. You guys aren't following what you're thinking. So don't bullshit yourself. Actually do it.
Yeah, and even I don't know if I'm a good stock picker. I mean, I bought a couple individual stocks, and I've done discounted cash flows and blah, 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 blah. But it takes time to really see if you're actually a good stock picker. Because like BABA, for example. BABA's been freaking wrecked. I wouldn't say annihilated, but I've lost like 20, 30% over cumulative on BABA. Could that stock moon in 5 years and I'm justified and vindicated? Sure.
Maybe.
But that's 5 freaking years down the road. That's why it's always better, always have the vast majority of your money in an index fund, because you may think you're a genius and then you're really just a freaking clown and you lose all your money. And that's the sad thing that's happening to a lot of these people.
Yeah, exactly. Just hyper speculative companies, which take up way too large swaths of their portfolios, and people get crushed, right? That's how people get wiped out.
Yeah, and even like the whole thing with the discounted cash flow, like, and people are like, oh, well, instead of buying clown stocks, I'll do a DCF. Well, the problem is, and like this was apparent with Intel when I bought it. I was expecting Intel's revenue probably to stay flat or decline. Like I was like, okay, they're probably going to miss earnings. It's going to suck. And then I saw, and it completely blew my mind, how bad their revenue got wrecked year over year.
Yes.
And at that, I couldn't predict that. I don't have the time and capacity and resources to do that much research to really understand where Intel was going to go. And at that point, I was like, okay, I have not done enough research on this stock. I am freaking out. But I only lost $25. $25 freaking dollars.
That's
I mean, yeah, it
nothing.
sucks. It's like
Yeah.
two Happy Meals, I guess. But at the end of the day, that's why I always say tiny bit of money for stocks just to have fun. Because let's say you had like all your money in that. Like that could have been $25,000 that I lost. Incredible.
Yeah.
That's years of saving right there.
Yeah, exactly. Yeah, like, and also when it comes to DCF models, most people suck ass at doing them. Most people are terrible at doing them. So when I hear someone say, "Oh, I did a DCF," I want to be like, "Okay, did you actually do one?" And then another problem with doing DCFs is most companies' financial statements are plagued with accountants playing around with them and messing them up. Like you're a CPA, you know how much an accountant can play around with the financials of a company to make it look profitable, not profitable. And a lot of companies, have a lot of one-time expenses. They bury expenses in their R&D, or they have optimistic growth, or the real big one is like goodwill, or like if they've done a acquisition. It's just there's a lot of messy details to work in when you're going through a DCF. So takes a lot of time. So if you are going to do one, just be careful.
From the accounting perspective, a lot of things on the financial statements are based on management's management's opinions or judgments. Like, for example, accounts receivable. The management and the accountants basically decide what percentage of these do we think we're going to not collect. And they use that guess, that judgment, to kind of determine what their actually net receivable balance is. But they could be totally freaking wrong. So you could be looking at a financial statement and thinking, oh, well, they have this many receivables. And then it turns out management's judgment was trash. And then boom, the receivables balance is a lot less, and you get much more write-offs into the future. So
exactly,
you got to be. That's why I said before you pick individual stocks, at least know you have to understand financial statements at the very basic. Exactly. And then even if you understand them, you can be totally freaking wrong.
If only there was someone who was offering a very fairly priced short course on financial statements.
Yeah, you saw that, didn't you? Yeah.
Yeah.
Well, if you guys didn't know, I do offer weekly seminars, but I've actually kind of cooled off on those because I've been so freaking busy. It's just, kids, man, they're killer. They kill your income. But yeah, and you don't even have to sign up for like. I'm just saying in general, you need to understand accounting. Everybody trashes accountants as investors. I think that's complete BS, because like a big part of investing is looking at financials. It's actually one of the biggest parts.
Yeah, it's making sure that it's not even just that, it's making sure the financial statements are assembled correctly. Like that's a lot of work. It's not my cup of tea doing accounting. I'm more finance, which is more forward looking. But yeah, like, God, I could not do the job of an accountant. There's just so many rules and stipulations that you have to do.
Oh, it's hard, man. Like even now, like I'm licensed. I work in public accounting. I'm still learning stuff every freaking day. It's like you never stop learning that stuff. You have to do it for decades to really just be a master at it. 100%. So we'll see. So what else we got? You want to talk about some creators? Got any thoughts?
Let's do it. Yeah, like I think this is now getting into more of the like gossipy sphere, which I'm not the biggest fan of gossip, but I mean, hey, we're grifters on here, right? It's going to keep you guys watching the stream. So let's talk about.
Well, I put some people in the titles, so I mean, we can go one by one. All right. So I was thinking, the first thing as like a perfect indicator of like where the market's going is Meet Kevin, which everybody he's my stepbro, of course, but you can see his videos have changed from individual stocks to talking about only macroeconomics. So that's the number one indicator right there that these YouTubers are switching their content, which I actually think it's a good thing overall, because I really hate when these creators talk about the most trash, unprofitable, share diluting, speculative stocks. They do it all the freaking time. So it's a good thing, but my suspicion is if we ever go through a bull market again, I think Kevin will probably go back to
oh yeah.
Which
that coupon code will only be expiring in one more day, guys, so hurry.
Exactly. So what are your thoughts on Tesla now?
Tesla, yeah. So great company, super innovative, way too expensive.
How much would you pay for Tesla?
Funny enough, I haven't done a DCF on Tesla. Man, so what I would say is how much I'd want to pay for Tesla is how much I'm is how much I would pay for other similar tech companies in that same kind of industry. So what I'm currently paying for Apple, Google, and Amazon, that's what I'd want to pay for the future cash flows of Tesla, because there's no guarantee that Tesla is going to continue to be able to sell the current rate of cars that it is selling right now. And when you look at the current cost of a Tesla in relation to the current income of the average American or anyone else for that matter in the rest of the world, we can see that a lot of Teslas are highly concentrated amongst the wealthy. So I don't know if that trend is going to continue because there's only so many very wealthy people that can buy these cars. I mean, and then once higher competition comes in, like once you have someone like Toyota come in who makes extremely well-built, affordable cars and engines, once they get a good head wrapped around self-driving technology, which isn't that hard to replicate when engineers are leaving Tesla and going elsewhere, they're going to bring that knowledge to those other car manufacturers who have larger manufacturing capabilities and better capabilities with their manufacturing with fewer quality issues. You're going to see those car manufacturers very quickly catch up to Tesla in terms of cars sold and the types of services that they're then providing. Tesla's biggest advantage right now is its software, its management team, its core of engineers. But the cars themselves aren't going to be that competitive 5 or 10 years out. And when I'm investing in an individual stock, I'm investing for 10, 15, 20 years.
Yeah, that's what a lot of people don't understand. It's like everybody looks at the recent performance of Tesla, and I can tell a YouTuber's a clown if they're like, focusing on the recent performance. But like you said, when you're looking like way into the future, it's like, okay, at some point Tesla's growth is going to slow massively, and then at some point it's like, okay, well, what's the market? What PE is the market going to assign
exactly.
Tesla? And you look at other. So you said tech companies. I still value it as a car company because I look and 86 to 90% of their revenues come from cars. And I don't really see that changing unless they have robots coming out. So I look and I say, okay, well, even if it had double the PE of a normal car company, most of those are like what, 6, 8, 10?
Yep.
I mean, Tesla's PE will probably be 15, 20 at some point in the future. I don't know. I don't think it's going to be worth that much.
I think what's different with Tesla and why so many people are interested in Tesla is because they're not looking at it from the perspective of a car company. They're looking at it from the perspective of the car is the literal vehicle in which they sell more products, more services, self-driving taxis, maps. That is why people are buying into Tesla, because there's so many unknowns of what their software could do. Now, I'm not saying that that's actually going to pan out, but that's the hypothesis that a lot of people have and why they're interested in buying Tesla and why they're willing to pay a lot of money for those future cash flows. Now, that's very risky. Could pan out, could not. I don't know. I don't have a crystal ball. If you currently buy Tesla, for anyone who's watching, like, hey, you do you. I'm just saying there are other opportunities in the market which also have a lot of really good possibilities for the future to make a shit ton of money. And the money that I pay now for those future cash flows are much more reasonable.
And plus, like the other, like, I mean, you mentioned it briefly, was the just the price of the cars. So people are expecting people to buy the cars, number one, and then on top of that, pay an extra 10 grand or a subscription for FSD. I mean, that just makes it even more of a luxury car company, more of a company that can only be affordable, a car that can be affordable by the richest people in the world. And people are like, oh, well, Tesla's got factories in China and Europe. Well, those companies or those countries or regions of the world, they don't make on average as much as people in the United States. So
and what's tough is that that also might not be a bad thing, because it's all about targeting niches as a company. If you can, it's not about selling the most cars. It's about making the most profit as a business. A lot of people get mixed up in like, oh, I want to, have a company that's massively growing their revenues. Well, if they're not making more cash off of their existing customer base, they're really just spinning their wheels in place. I'm okay if Tesla doesn't sell a crazy amount of cars in the future, but if they can make a lot of money off of their current customer base and their future customer base, that's okay with me. Much like Apple phones. Apple doesn't have the majority share of cell phone sales across the world. That's primarily Samsung and Huawei. But Apple is the most profitable phone company. They're the most profitable phone company. Hence, they're the most valuable. So that's also something that people who are watching today, don't just look at the sheer revenue of a company, also look at what profits they're going to be expected to make in the future. And that's when people like Chris here, who makes those accounting statements, come into play, and they're super critical, because they're the ones who are going to be making those estimations. And that's a tough gig.
Yeah, and I notice a lot of people like that is a big argument with Tesla people. It's like, oh, look at the gross margins; they're so much better. Well, of course, yeah, they have high gross margins because they're a luxury car company. But you also have to factor in, okay, competition.
Exactly.
If a company's making high margins, that just attracts competition like freaking flies. So at some point, I think their margins are going to shrink. And then you look at the car industry as a whole; they have a lot of these manufacturers. They make high margin cars, like Ford. They make the freaking F-150. That's a high margin vehicle. But to actually appeal to the mass market, they have to sell cars that are not as high margin, because not everybody can drive or buy an F-150. So that's another thing that's going to be baked in.
Although it seems like everyone does in Canada.
F-150s?
F-150s, Rams, trucks. A lot.
That's actually interesting. I didn't know what Canadians drove. I thought Canada would be more like Europe, where everybody drives freaking compact cars and all the parking space super narrow.
Very American. A lot of American, and then the other car, and then a lot of Japanese. So Toyota, Honda, Kia.
Man, we should have annexed Canada. I don't know why we didn't.
Yeah, I know, man. As long as our government gets to take over the American politics system, I'm fine with that.
Oh God. Actually, yeah, your politics is probably way tamer than ours.
Our system is better, but our leaders.
Yeah,
I just like all politicians equally. I'll just put that on the on the record.
Yeah, people think like YouTube finance is BS. YouTube politics is way dumber. Like I hate politics, because at least with finance, you can actually like build wealth as long as you do it properly and you set yourself up. With politics, you just get into this world of like, hatred and drama, and there's no benefit to it. So we don't have to talk about politics, of course. All right, so Tesla. So when would I buy Tesla? I'd probably look in the hundreds, maybe. And a lot of people laugh at me, but
I don't think it's ever going to go that low. My personal opinion. Yeah, I mean, just because something could be intrinsically worth a certain price, that doesn't mean it's ever going to get there. Because if people are always willing to pay more for it, then it's always going to stay above the price that you want to buy it at.
It is a very culty stock, and that's another thing in the valuation. So at the end of the day, what's going to happen is I'll probably just never buy Tesla. Which is fine.
There's a lot of other good opportunities. Yeah, exactly. There's a lot of good. This is something that if anyone here has ever listened to Peter Lynch, he's a really big fund manager in the 80s and 90s, and he had an incredible, stellar record. And if you go back and listen to, I'm sure you've heard of him, Strongman, Peter Lynch. Some of his philosophies on investing are just as real and important today as they were 30 years ago. And the big one that always comes out to me is that the stock market is a weighting machine, meaning over time, what actually matters, that weight is going to come out in that stock. It's not going to be shown in 6 months, 1 month, a year or two. You're buying an actual company, right? It's not just a little ticker symbol on a screen. It's an actual company with people behind it. And that comes out over a 5-10 year period. And that's how you really make money in the stock market if you want outsized returns.
Well, didn't he also say something about, if everybody's talking about some stock, that's probably not the stock to buy.
Exactly.
So it's like, to me, it's like common sense. It's like if this one stock is talked about on YouTube constantly, if everybody says it's a buy, everybody says it's the future, it's probably not the time to buy the stock. However, if people are saying, oh, this stock is trash, it's garbage, it's dead, it's going to go to zero, and then you look at the fundamentals and it's like, that doesn't make sense, that's maybe a stock you could consider.
Exactly. And that goes back to the philosophy, whether you're a efficient market or a inefficient market kind of perspective on stocks. When all information is known, meaning a lot of people are talking about it, there's no return there. There's no alpha to be made because all information is known. All future projections are known. But in inefficient markets, so usually that's in the smaller cap micro space, because those companies are harder to read the financial statements. There's less people paying attention to them. It also explains why small caps tend to outperform large caps. But those small caps have an inefficient market, so that's where there's money to be made. Like you said, companies that get beat up, nobody wants to deal with them. Maybe like Intel right now, time will tell, right? Even though it's a very large company, it's been beat down. It could have an outsized return over the next 5 years. We don't know. It's a game of probabilities, and because we don't know, maybe just buy VT.
Maybe, I don't know.
Yeah,
Yeah, Intel was one of those stocks. Like, I never sell stocks, but oh my god, that quarter was just absolute destruction. So at a time like that, it's like, okay, I think I did something wrong. Boop, I sold it, lost by $25, but whatever. But going back to the inefficient versus efficient markets, I mean, honestly, the more I think about the 2020 2021 market, the more I think that whole efficient market hypothesis is kind of BS, at least in the short run. In the short run, I think clown stocks, I mean, obviously, this is common knowledge. I think most stocks can go anywhere. But in the long run, yes, I think markets eventually, at some point correct, recent fluctuations and actually value stocks correctly. So there is money to be made in individual stocks. That's why I'm so big on Chinese stocks, because if you don't like risk, stay away from them, because there's massive risks involved with those stocks. But I sit there and I think, I'm like, wow, large, massive economy, second largest in the world, massive, highly profitable tech giants. At some point, I think the market's going to do a swing, and I'm willing to wait. But
yeah, I love Alibaba. I bought some, got wrecked on it, just like I'm sure many of you have. And it just pisses me off, because it's like, I really want to own a piece of the Chinese market into the future, because we know in the future they're going to outpace America, Canada, the most of the Western world, sadly. And I want to own a piece of that. It's just, there's a lot of risk. And if it doesn't play out, oh, well, don't put your whole portfolio into it, right?
Yeah. And even with VT, I mean, Chinese stocks are only like 3% of VT. I don't think a lot of people understand that. They think Chinese stocks are like this massive percentage of international stocks. They're not, which is insane to me, because you look at the GDP of China versus the market cap of their stock market. It's like, holy freaking crap. This is either a value trap, or it's like the opportunity of a lifetime, which is why I took a gamble.
Exactly. Yeah, like the big discount factor to Chinese stocks is the government. Depending on, if anyone's been following the news and looking at China currently, what's been going on there. I think that's what's further contributing to BABA declining even more, is all this civil unrest with the banks and with the population. If I don't know if there's ever going to be a regime change, but if there is a positive regime change, I would put much more money into the market, because that discount factor is then going to be lowered, because my risk will be lowered. Unless we have a Russia situation where, in the late 90s, people put a ton of money into Russia because communism fell. And then 20 years later, look where we are, and you got screwed.
Yeah, well, I think I think China's more stable than Russia was. Russia was kind of a freaking disaster after communism fell. China, I mean, yeah, it's an authoritarian government. People don't like that, but I think there's a lot more stability. But we'll see. I could be 100% wrong. And like
we
people
all
talk
could be.
about it. Yeah. But at the end of the
that's
day,
fine, because we buy VT. That's fine. Yeah. Own a little bit of everything. Here's one little criticism I actually have of you, Chris, that you bring up often, talking about American stocks and how the U.S. stock market makes up the overwhelming majority of the world's, stocks. And that is true. But I will say that there are a lot of international companies which are now domiciling themselves in the United States, which they register, their company in the United States, and they are based there, but their revenues are actually all over the world. For example, Coca-Cola. Coca-Cola is an American company based in America on the US stock exchange, but the majority of its revenues are all over the world, international. And that's something that's difficult to deal with now with the S&P 500. It's because 50 years ago, the S&P 500 truly was the top 500 companies of America. Now, it's US-based companies, but they're primarily internationally getting their revenues all over the world. So it's difficult now to really say, I don't have the answer as to whether what you're saying is 100% true. I'm just saying that we should keep in mind that the world's become very global and very international, and it's difficult to then value companies based off of that because of these fluctuating currencies.
Yeah, I mean that is a good point. People bring that up all the time, but at the same time, there's also a bunch of companies based internationally that derive revenues from the United States.
True.
It's a global economy,
True.
and that's why to me it's so complex that I don't have the resources or the knowledge to truly, and I don't think anybody does, to truly understand how all these companies and countries interact. That's why I say you buy them all, and even if this is just my thoughts. Even if a lot of US companies derive their revenues internationally, to have our stock market be 60% of the world's market cap, but we only produce 25% of the world's GDP, I'm sure some of that disparity comes from that, but that just seems like an enormous disparity, like massive, out of control. I mean, the only thing that makes sense to me is if US corporations were going to have roughly 60% of all the corporate profits, going perpetually into the future. Okay, that would make more sense. I could not find any data on that. I don't know if that's true or not.
I don't know
But
about that either. But what I can say, which maybe sheds some light as to why investors in general are so willing to buy U.S., Canadian, and European equities, is mainly because of the country's default risk. So America, Canada, most Western countries have very low default risk. Germany specifically has like 0.01%. You can go on Moody's, which is the credit rating agency of world countries, and you can see, the countries with very low default risk, meaning they're not going to, bail on their contracts to pay the money that they borrowed. They're very safe and very dependable. So people are more comfortable to take their money and park it in those countries. That's why South America parks a lot of its money in North America. That's why a lot of Chinese people park their money in American and Canadian real estate, because we just have lower chance of things going tits up, basically. So that explains some of it, but again, not all of it, certainly.
Yeah, I mean, because obviously the U.S. when we're still the number one superpower, blah 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 blah. But I mean, even if you look at VT, the vast majority of VT is stable Western countries. Like like I said, people have a misunderstanding that VT is mostly like emerging markets, China, India. It's not. There's an allocation to it, which I think is a good thing, because if those economies and countries continue to grow and become more stable, that's going to help your portfolio. But the vast majority of VT is like outside the United States is like UK, Germany, all these European countries. So you're just letting the market decide. You're letting the world decide. You're not sitting there trying to figure out, well, I don't know. I think the US will be a superpower till 2035. And at this point, maybe I'll switch over to, I don't know, Germany or China.
Yeah.
You don't have to worry about that.
Or Venezuela, they'll take over.
Oh, yeah.
Because they have all their money in Bitcoin reserves.
Yeah, and plus, like my number one argument that I say all the time about VT, which still has 60% US stocks. I show people all the time. You can go Google it. It shows you right there. Roughly 60% of VT is North American stocks. So I don't understand you hate American stocks thing. But if you look at the recent performance of the US stock market and the cyclical nature of US versus international returns, the U.S. stock market has just blown it out of the water. Like, it's just crazy, which is great if you had all your money in the U.S. stocks. But for a lot of people, that just reinforces the idea that, U.S. stocks are the place to go. But if you're buying at such higher valuations, your future expected returns are lower.
Exactly.
If you're paying more for these stocks. So at the end of the day, I don't know if I'm right. I could be totally freaking wrong. That's why I hedge my bets by also having a very large international allocation. Because if you think about it, let's say U.S. stocks, people start to realize that international, is the future. U.S. stocks are going to suck potentially for a long time. Mm-hmm. And you're going to be one of those few people with a large international allocation if you have VT, and you're probably going to outperform the vast majority of people.
Exactly. And I mean, that's where maybe if you did have a couple individual stocks to de-risk yourself from individual country risk or region risk, and instead just from an actual segment of markets or products, that's a place where you could hedge. If you're into bonds, I'm not the biggest fan of bonds. I mean, that's one way you could hedge. There are a lot of options. Talk to a financial advisor, or just YOLO it all on GME calls. I see it all.
Well, I'm actually not a big fan of financial advisors, but on YouTube,
I think they're scammers, but
yeah, it's on YouTube. I can't give you specific advice. Go talk to a financial advisor. But at the end of the day, it's like, just go to bogleheads.org and freaking read, people. Like this philosophy is
or
not
Canadian couch
hard.
potato if you're Canadian,
or that. Yeah, it's like come on, you literally just raise your income, cut your expenses, and buy VT. I mean,
Exactly.
I don't know how this is difficult for you people.
Yeah. I mean, that's something we could briefly talk about. So much of our time here as investors is spent worrying about our investments, what we're going to do with them. We want to get rich. We want to, I think most of us here want to live frugally. We want to live without having to work every single day. That's all great. And, a lot of us are stressing over our stocks and trying to, squeeze out 1 or extra 2% on their portfolio every year. But maybe if you ordered less food, maybe if you cooked cheaper food, didn't go out to eat out at restaurants, lived within your means, you could save 5 or 10% on your salary. And that's going to put you much further ahead, not just financially, but in a mental space to then succeed more in your life. That's more of wishy-washy motivational speaking, but I really do think that's important. I think more of us need to take that into consideration and not just solely consume in investing knowledge and information, consume other life experiences as well.
Yeah, honestly, the most money I saved was back when I was in the military, and because I was making way more back then, and I literally didn't think about stocks at all. I just had my automatic contribution into my retirement plan, which is roughly VT, excluding some of our enemies, because our government doesn't let us invest in like China and Russia and stuff like that. But I just had an automatic contribution. I didn't think about stocks. I was stress free about my investments, and I went and had fun, and that was probably the best investment returns I ever got. And now that I'm focused more on stocks and trying to value companies for fun, I'm probably underperforming. I mean, we'll see, but most likely, I'll underperform relative to if I had just put all my money in VT and just had fun, done something else besides worry about the stock market. That's why I hate financial media. That's why I hate most YouTube channels. They are completely unnecessary. 100%.
There's a really good book called The Millionaire Next Door. Came out in the mid 90s, late 90s. And it was a study of people who were millionaires and how they became millionaires in America. Turns out, overwhelmingly, they're just simple, everyday, blue-collar Americans, working their jobs, saving their money, living within their means. Maybe they're in a specific trade or in a higher field, and they became millionaires over time. I mean, if you put X amount of money away every single year in a diversified fund, you will be a millionaire. And once you realize that, a lot of the stress comes off. But then you have to actually execute on that, right? It's one thing to say you're going to do it. It's another thing to do that over 25, 30 years of your life.
Yeah, and a lot of people become millionaires in their 40s and 50s. Now, people make fun of me because, they look at me. I'm like, oh, you're not a millionaire, strong man. It's like, yeah, I'm 32, dude. But most people aren't going to be millionaires by the time they're 18. That's just a fact. And a lot of people lost that knowledge because they saw what happened in that stupid market and they saw clowns make millions off of AMC or something like that. But in the long run, if you want to be a millionaire, it takes a lot of time, lot of time. And that's just what I try to tell people. And, hopefully they start to listen more as this market continues to get wrecked. Hopefully we'll see, but I'm patient.
All right, what's next?
So what else can we talk about? We got about 15. We can do some comments.
Okay, let's do some comments.
So this is the downside of me not planning my streams, ladies and gentlemen. Sometimes I have no idea what I'm going to say. Let's see. Who are you?
Who is your guest? I am Jacob. No, I'm kidding. I'll put a little more information into that. I work in the Canadian finance industry, went to school, studied specifically finance and equities, niched my studies on investor psychology and how it relates to social media. I'm licensed here in Canada for stocks, and I work with a big Canadian company as a brokerage guy.
He's a scammer.
Yeah.
Tell us about your course. Do you have a course?
I do have a course. It's called 1, 2, 3. It's free.
Actually, the one course I'm going to do, people are going to get mad at me, is I'm going to make an accounting course, which I know that's kind of grifty, but I think that would actually be helpful for a lot of these stock pickers.
6 a.m. Pacific time, bro. The rest of the world is not just on Pacific time. It's nearly 10 a.m. here in the East.
And I got a second stream coming up. I had to fit Jacob here in the morning. Yeah, quiet, Cole. This is called hustling. Okay.
Yeah, fine. I'll come on again then later. Look at me. I'm just inviting myself on at a better time. How about that, everyone?
And actually, the last stream we did, like the views at the beginning, I was like, oh, a lot of people don't seem to be watching this. And then I saw over time, like the views really took off. So you were definitely a hit there, Jacob. So
Perfect. I'll take my shirt off next time. They'll go even higher.
you don't have to. I'm kind of a clown. I admit it. I watched so many crypto grifters become irrelevant and lose any rep they had last crypto winter. Yeah, I've even seen like new crypto channels like Diamond Hands Investing. She started talking about Voyager and this and that, and then it collapsed. Went bankrupt, and now she's talking about 401ks and lottery and stuff like that. It's like, oh wow, that was so predictable.
And I think what's really difficult about a lot of finance YouTube now is the content. There's a lot of excellent content on how to invest or manage your personal finances that came out 2016, 17, 18. It's all there on the channel. And that's what's aggregating all the views now. Because once it has 1 to a couple few million views, there's no point in someone going to some other new channel which is propped up and telling you how to invest in a 401k. The YouTube is not going to direct audiences to those videos now because there's already excellent edited videos which get the point across. So I think a lot of creators now are going to have to shift into just the boring, mundane advice or the hype stock advice into maybe something that's a little bit more creative or something that's a little bit more about personalities. And I mean, I think that's why you're so popular, is because you have a very unique personality, as well as you are calling out all these grifters. I think what's going to really further your channel is just the continuation of your unique personality on this site.
That's my plan, man, because like you're 100% right. Talking about like bogleheads and index funds, nobody wants to hear that after one video.
Boring. Yeah,
of course. So I mean, I was like, oh well, I can be a clown and entertaining, and also like kind of like slip my message in every once in a while. So I'm not going anywhere. I mean, like maybe I'll have to switch my content a little bit, but the core message of my channel is always going to be: don't buy stupid individual stocks unless it's a small part of your portfolio, and then buy VT. But I can always like do more comedy focused stuff, whatever I have to do. You don't have to become a macroeconomist for content. I don't know about you, macroeconomics. Like I did like a temporary deep dive. Like I read about like currencies and macro. I read a couple books by Thomas Sowell and Milton Friedman. I just got so boring. Like I just don't care what's happening with interest rates, and I don't know.
I had to do so much reading on that. It was mind numbing. The reason why I don't find it that interesting either is because none of the information is actually actionable in your daily life. You can't affect the macroeconomic environment, and you can't really predict what interest rates are going to do or what a global GDP is going to do. You can't affect that. What you can affect is maybe individual stocks, figuring out, they're going to do X amount of revenue this year, and currently their PEs that like there's a lot more actionable information there to make you outsized returns. And even that, you're statistically unlikely to even do that in the first place. So I agree with you. Just microeconomics isn't that exciting. But it does give you a lot of insight into why politicians do certain things, maybe why legislation's taking place in your country. So it can leave you a little bit more knowledgeable in that regard on a more broader political spectrum.
Yeah, I'm not saying macroeconomics is useless. I'm just saying it bores me.
Yeah, it's not for me either.
Carson Weekly, as a certified CPA, what are your thoughts on VAT contributions? And what is a VAT contribution?
I don't know, variable something tax. I know that's a tax in UK. I'm Canadian. I don't know anything about American.
Yeah, what if this is like a common tax in the US? And I look like an idiot. I don't know. I thought VAT was like a tax on freaking sales. And mega backdoor Roth. Should anyone be maxing this out?
Is that Jeremy's backdoor?
Well, I don't have any personal experience doing a mega backdoor Roth, but the thing with moving money between tax advantage accounts, you got to be really careful, because if you move from a traditional to a Roth, you're going to get a massive tax bill. So if you ever want to do a strategy like this, you need to pay a CPA, because they can actually look at your tax situation and say, well, if you pull this much out of your traditional and convert it to a Roth, this is how much your taxable income is going to increase, blah, 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 blah. So there could be a lot of strategy. Personally, I like the Roth the best because you pay the tax up front. We're in historically low tax rates. And then forever into the future, once you take the money out in retirement, you don't pay taxes on it again. And I've talked about traditionals like in retirement. If you pull out $1 million from a traditional IRA, that's $1 million of income and you get taxed to death. I can put out $1 million from a Roth IRA, and guess what? It doesn't do anything. It's $1 million.
But strongman, why don't you just move to the Bahamas and hide all your money?
Yeah. I'm just going to move to the freaking Bahamas. I hate those channels that are, my camera keeps freaking falling over. I hate those channels that are like, oh, just leave the country and renounce your citizenship, bro. It's like, yeah, how many people are going to freaking do that?
It's like, yeah, I like paved roads and like an ambulance system that's going to respond in time.
I'll stay in the U.S. and pay my taxes.
I like air-conditioned buildings and, comparable infrastructure. I just go to Florida for a vacation if I want, warm weather.
Oh, I love Florida. Too bad I'm stuck here with the family. The issue with Intel is you like PC stuff. You should have known it's coming. I don't think anybody predicted that much of a freaking wreckage.
Yeah.
I don't know. I sold. Whatever. I don't even care about it anymore.
Yeah, he's buying Tesla.
Yeah, just buy Tesla. But yeah, people were talking trash because like Tesla, like I think they
shit it. I didn't shit on it. I said it was fine. I just said if you understand how markets work and how valuation works, there are all the other opportunities which are also really good, and diversify yourself. If people can't, take that, then hey, like you do you. Statistically, I'm likely to outperform you then at that point if I buy VT.
No, man. Have you seen Tesla's past performance? Yeah. That's the worst argument I see is, well, Tesla went up this much over the last 10 years and VT went up this much. It's like, you clowns. Markets are forward-looking. Performance is all about the future. It doesn't matter about the past. What?
Yeah. Past returns don't equate to future returns. And a lot of analysis actually is looking at past historical returns. And there's a lot of variance in there. And that's why most people who try to predict the market are terrible at it. Because they're looking at past historical information.
Most actively managed funds underperform index funds.
Oh, massively. Yeah.
That's a secret.
Mainly because of fees. Mainly because they match the market, but then net of fees, that's why they underperform.
And taxes. Because they're trading in and out and they have to pass those taxes through to you.
True.
Strongman personal communism. Strongman lost his virginity to a Chinese woman. Yes, that is my thesis behind Baba stock.
Yeah.
Strong dollar is going to boost international stocks. So I'm not an expert on currency, but I thought, the stronger the dollar, let's say you have, you own a company that's getting earnings in euros. When you convert those euros to US dollars, you're getting fewer US dollars. So I would assume a strong dollar is actually bad for like unhedged international stocks. I don't know if you know anything about that.
Yeah, no, I do. It actually is the opposite. It's because imports become cheaper. So as in America, you can then buy more international stuff and import it, and it's cheaper for you. So those greater imports mean greater exports for international companies, hence larger revenues and profits. So it actually is positive for international markets.
Interesting. I was wrong. Yeah, I always thought like a strong dollar. It's like if you think about like owning VT and you're getting those companies are having earnings in euros.
Yep.
And you also look at the like a lot of the companies reporting earnings recently. They're saying they have international headwinds, and we've seen the dollar become stronger. So it looks like, let's say Facebook, if they're making money in euros overseas, to me, it sounds like a headwind because they're converting that euro, those earnings in euros over to US dollars, and they're getting fewer US dollars.
Yep. Yeah, but they're selling more. So because they're selling more, that balances out the money that they'll be losing on the currency exchange. That's why the Canadian dollar is purposely suppressed to be less than the US dollar. That way you guys buy more of our shit. Yeah. We sell more to you.
Well, that was a big criticism that a lot of people have about China is, they kept their currency artificially low. So, people would, of course, want to buy their stuff more because it's cheaper.
Yeah. Yeah. And I think the main criticism, the criticism of China is they were like drastically suppressing it, like into the dirt, basically. And it was questionable whether that was actually something that was fair to the rest of the international market. And I agree. Like, is that really something that you should be doing as a country? I don't know.
Yeah, I don't think
I'm not a currency expert. I just understand how currencies work.
Yeah, I don't think they care about being fair. I can tell you that. They just want to, succeed. People are willing to pay a premium for American companies. They are for now.
American and Canadian. Yep.
And even European. Well, maybe not European.
Less European. Yeah, less in Europe.
Well, the problem with Europe is the euro. That's the problem. The European Union. I mean, and then you have all these freaking crap companies in Southern Europe, not companies, countries in Southern Europe. I mean, they're great countries, but they're
beautiful countries.
Trash.
Yeah,
Spain, Portugal, Italy, like Greece. Like that's what's really dragging down, I think, European stock returns. But Vanguard is paying strongmen to lure us into VT.
I mean, that's fine. I mean, they offer some of the lowest index ones, so you're saving yourself money.
The amount that I prop up VT, they should be paying me. This is unbelievable.
And in Canada, there's also iShare. So if you got Vanguard or iShare, are the two big ones.
Yeah. I don't know if there is another VT out there. I'd be curious to see another company come out with a VT that's like 0.03% expense ratio. I mean, at that point, I'd probably consider switching over. I mean, that's
like we're very lucky here in Canada. And if there's anyone who's a Canadian investor here watching, like we're spoiled for the choice of ETFs that we want. There's tons. And I wish America was more like that.
Strong. You do realize if China succeeds, you are likely not going to survive. They worship World War II Germany too. I don't want to say the N word. Well, I mean, I'll be out of the military soon. So
true.
I
that's actually an area I also know a lot about is military stuff and world history.
Oh yeah.
I don't see China being able to take on the U.S. war machine anytime soon. And even if they build enough ships, like Navy, they don't have the experience or the systems in place or the manpower of the systems and understanding how to operate a coherent Navy to take on the U.S. Navy.
Oh,
they just don't have that. It takes 100 years to then develop.
Yeah, we can't invade them, and they can't invade us.
Exactly.
I mean, it wouldn't be like a decisive end of the war like we did with the Germans in World War II. That because we actually invaded Germany, which I mean, imagine invading China. You're not going to hold that.
Yeah, they got a 1.2 billion, 1.3 billion people.
It's a lot of people. I got 70 grand in a traditional, trying to figure out how much it's going to cost me to convert to a Roth. Well, that's why you need to go to a CPA, because if you pull out all 70, that basically gets stacked on your income. And now you have 70K more of taxable income, and that's going to put you in a different tax bracket. So you need to kind of like get an estimate of how much you're going to make this year, add that 70K to it. And then that's why you need to go have somebody actually like put it into software, pay them to do it, because it could potentially save you a lot of money. Oh yeah, you'll pay 25%. I don't freaking know what you'll pay.
Wow, let's see a few more comments here, guys, before we end the stream.
Is a rich shill. Let's see. I'm trying to find. Okay, here's one that this is an issue that I always have with a lot of people with VT. Look, guys, VT is a one-stop shop. It has both U.S. It has everything. It has U.S. and international stocks. So if you do VTI and VT, you may think the VT is international. It's really not. It's everything. So this portfolio that you have right here is literally just insanely weighted towards the United States with a very small fraction of international stocks. VT is not an international fund. It's a global fund. So if you want 25% international, you may want to look into like VEU or VXUS or something like that. So you need to really understand like what you're buying. That's all.
Or Tattooed Chef, that's also an option.
Or Tattooed Chef, yeah. VT is voluntary after tax. Just started my 401k, and it seems like I can put in an extra and roll it into a Roth. I guess I'll hire myself a CPA. Yeah, you need to be careful with that stuff. I've never experienced that personally. But most of our clients, they're not saving enough to max their 401ks. But yeah, it's when it comes to tax advantage accounts and taxes, you need to be extremely careful with that. Lots of ETF choices. We have to watch the expense ratios. Do you have your expensive crap there in old Canada?
Oh, of course. Yeah, certainly. Because the more niche you get with a ETF, the higher fees that they then charge, because it's, you're paying more because you want more specific risk factors. Look at ARK, right? It has very specific risk, and they charge a higher expense fee because of that.
And they're just grifters too.
And maybe they're grifters too.
All right, guys. Any last questions for Jacob? I think we're going to cut this off. I got another stream at 11. All I'm going to do is just stream.
Busy guy.
I'm a hustler.
Yeah. I got to get on with the other guys and talk with them and see what they think about all this stuff sometime.
Yeah, I mean, I can share you their I can send you their contact info. I'm sure they'd love to have you on. What's your intentions, Jacob? What are you trying to do?
I just love talking about this stuff. I work
You just
in it
started
every
your channel,
single
man.
day. I've thought about it. If I did, it would not. It would be more on the creative side. So it'd be more talking about the psychology of investors and some of the nostalgia that we had in our past, and how a lot of our child in us has died as a result of looking at all these numbers so much. It'd be more entertaining and less about the actual nitty gritty of investing, because there's already so many amazing channels on that's just a dead horse at this point.
Yeah, no, definitely. I would say at least try it. If you don't like it, whatever. But I mean, you seem to know a decent amount. You probably, get some subs. You probably do better than me, because obviously I'm not the most professional YouTuber on the planet, and that's fine. All right, last comment, guys. 11, what time zone? 11 Eastern. All my times are Eastern time. All of them. So I don't care what time zone you're in. It's about my time zone. Well, with that being said, thanks for coming on, Jacob.
It was a pleasure, strong man.
We'll do it again. I might actually plan the next video too. I don't know. I'm a horrible YouTuber. All right. Well, that's it. Like I said, thanks for coming on. If you ever do a YouTube channel, let me know. I'll share it. I'll promote it. And
Maybe.
Maybe.
Maybe we'll just make a course first.
All right, guys. Cue the outro.
We're gonna go down. We're only going up. Invest in that stock, and I'm out like probably 300K, and I've already written off that amount in my head. Maybe it works out and they don't go under. And
I don't ever slow up. No, I don't take shit. I got no love for the fakeness.